The Buffett indicator has been flashing a pretty serious warning to the stock market. If you're unaware what that is, it is the ratio of valuation of the 5,000 largest publicly traded companies relative to the GDP of the United States. And as you can see, at the peak of the dot-com bubble, we were a little below 150% relative to the GDP. At the peak of the financial crisis, a little over 100%. And now where we stand right now is the highest it has ever been in history, sitting at just over 200%. So what does this mean? Well, the stock market is, as everyone knows, extremely expensive right now. Things are at some of their highest valuations they have ever been in history, but the stock market could just keep going up. No one really knows if and when it is going to top out. Now, there are a lot of indicators saying that we could have a recession in 2025, but really we'll just have to wait and see. As everyone knows, the stock market is not necessarily an indication of how well the economy is doing. There are a lot of people that have been struggling in the last couple years, but the stock market hasn't cared about any of these economic indicators. It has just continuously gone up. In fact, in 2024, it went up almost 25%. And compared to a market that averages 7 to 10% a year, this is a pretty crazy year. So I guess we'll just have to wait and see what 2025 brings. In my opinion, I wouldn't be buying stocks here, but I also said that last year. I have just been holding investments that I purchased in 2020 and 2022 and riding this wave up. I haven't been deploying any more cash into markets because from my perspective, I look at it from a risk-adjusted return, and the market is a little risky right now to be putting cash in, especially when you have high-yield savings accounts and bonds yielding you around 5% risk-free. But let me know your thoughts in the comments and follow me for more.